Hello and good afternoon. My name is Holger Nass and I welcome you to Hoenle's earnings call for the first half of the fiscal year 2025-26. The results will be presented by the CEO, Dr. Franz Richter, and the CFO, Robert Stark. Like always, we will follow the presentation with a Q&A session. In case you have any questions, feel free to use our chat box, enter the question, and make sure to preface the question with your name and your company name. We will record this event and you will be able to review it later on Research Hub. Also, we do cover Hoenle AG, and in case you have any interest in the research, I will post the link in the chat box in a few moments. That's all I have from my side. I now pass it over to you, Dr. Richter.
Yeah, thank you very much, and also welcome from my side, from our side. So we would like to go through a short presentation about the numbers and then enter in the Q&A session. So the first half year of our fiscal year 25-26 ended with increased results from the second quarter compared to the first quarter. So from 21.5 in Q1 to 23.8. There is still the market environment a little bit difficult. So there is basically still a reluctance in the investment activity in the plant engineering, mechanical engineering. So the bigger systems, what we see, especially in the BU business unit curing. The other business units, adhesive as well as disinfection, saw a more active environment. We have positive results in both of those, and the trend is directed upwards. In the group, we have a gross profit of 30 million, which is a little bit up compared to the first half, and also the EBITDA is up compared to the first quarter, and it was significantly up. It was a very difficult first quarter with almost break even, so 0.5 million, and now we are at 2.2 million in Q2, ending up to 2.7 million EBITDA for the first half year, which is a little bit below, but almost on the same level as the first half year in previous fiscal year. With this introduction and this overview, I would then ask Robert to go a little more into details, and we will come back later with a summary.
Okay. Thank you, Franz, and also a warm welcome from my side. I will guide you through some further financials of our half-year result in terms of profitability, sales, and our capital structure. On this slide, you see our quarterly revenue and EBITDA margin development. So what we see is that our business in terms is project-based. So this naturally leads to fluctuations from quarter to quarter. Particularly true, this is in our business unit curing, where larger equipment projects can materially influence the timing and the revenue recognition, and also the margin contribution from quarter to quarter. So looking at the quarter-on-quarter development, Q2, as Franz said, was significantly stronger than Q1. Revenue increased by more than 2 million euros, and EBITDA margin improved to around 9%. So this was mainly supported by a better product mix, still a strict cost discipline, and the fact that the cost of materials ratio improved also compared with the prior year. So let me turn to the business units. To the business units, starting with adhesive systems, revenue amounted to 17.4 million euros, slightly above the prior year level. EBITDA increased to 2.3 million euros, up by around 0.3 million year on year. So this improvement was mainly driven by a better product mix. We had an optimization of our order structure, so less small volume orders, and we had efficiency gains in our production and logistics. Within this business units, the equipment sales for the adhesive curing remained affected by the customer's reluctance to invest. But there were several customer projects supported the adhesives business on this case. Strategically, adhesive systems remains focused on demanding applications in electronics, medical technology, and optics. Turning to curing, in curing the picture remains more challenging. So revenue declined to nearly 40 million euros, down 18.6%. EBITDA was minus 1.3 million. So the decline was mainly driven by continued investment reluctance in the mechanical and plant engineering. And that's both. So it's both in the printing press applications as well as industrial surface coatings. In addition, we had challenges throughout the insolvency proceedings of Manroland Sheetfed, one of our bigger customers, and compared to the last year, the discontinuation of our solar simulation systems business. So these facts contributed to a lower revenue level. On the cost side in this business unit, the restructuring measures we implemented had a positive effect. So we see positive effects on the personal side to lower expenses. But however, given the sharp revenue decline, these savings were not sufficient to offset the volume effect of the first half year. So going forward, our priorities still remain clearly. It is a strict cost management. It is a more focused product portfolio and within the engineering and also development in our production and a stronger push in our after-sales business and the lifecycle solutions. To our disinfection business unit, continued a positive trend. So revenue increased to 14 million euros, up nearly 8%. EBITDA rose to 1.8 million euros. So the main driver here was higher sales of UV lamps and equipment, particularly in the field of water disinfection. So we are also building up sales capacities in North America and Asia, which increases our personnel expenses on this side. So overall, the business unit picture confirms our strategic logic. Adhesive systems and disinfection provide profitable growth opportunities, while curing requires continued restructuring and portfolio focus and a stronger sales execution. Let us move to the financial profile. So despite the weak market environment, our cash generated from operations amounted to nearly 2 million euros in the first half year. This was supported also by working capital management. Cash flow from investing was minus 0.7 million euros, reflecting investments in property, plant, equipment, intangible assets. And the cash flow from financing activities was 1 million euros, mainly driven by repayments of our bank liabilities and lease liabilities. The cash end of March stood at 7 million euros. Our net financial debt decreased to 38.8 million, compared with nearly 45 million end of March last year and nearly 50 million end of year 2022. So this means we have continued to reduce our net financial debt over time. Our equity amounted to 76.6 million. Equity ratio was around 53%, and the balance sheet therefore remains robust. So also here to mention that a significant part of our financing relates to our corporate real estates and buildings, and these are long-term secured, also with attractive interest rates. Given that, I would like to hand back to Franz for our outlook.
Yeah, the outlook, I mean, we had issued the guidance, revenue 95 to 105 million and EBITDA 6 to 9 million. And we also had said that depending on the market environment, so with difficult market environment, we are looking more and we expect more on the lower end of the revenue. At this point in time, we still see that it's realistic. We are maintaining with this guidance, with the published guidance, and we expect that we are in the lower half of the guidance range will be the outcome of that year. Of course, everything is depending on the market environment, as I think everybody knows right now, very unpredictable, but so far it looks like that we will stay in that guidance. With this, I would hand back to the operator, and we are ready for your questions.
Thank you so much for the insights. Let's jump right into the curing business. And one of the question reads, Q2, we saw some sequential improvement in curing. Is that sustainable, or was it rather project timing? And in reference to that, can you confirm that the bottom in Q1 had been reached?
I mean, it's always difficult to say whether the bottom has been reached. I think we are like I said, in the market environment is one, reluctance of big investment is one. We also have some internal topics. We have new product lines coming to the market around third quarter, calendar year quarter, means our last fiscal year quarter. So therefore, that is a little bit a mix, but it's difficult to say whether the bottom has been reached right now. We are fighting for each order, of course, and try to get those orders which are available in the market.
Thank you. Can you give us a little bit more granularity, a little bit more background on MM Roland Sheetfed, how big of a client they were, and what the impact is as a base going forward?
Yeah, I mean, that's it depends to which time frame we compare. A couple of years ago, I think it was more in the, what was it, 3-4 million range. The last years was already slowed down, so therefore right now that is probably, I don't know what would be, what did you have last year? I don't know exactly what Roland was, but
Shy of 4 million. So
it's about 4 million.
3.x.
Yeah. So that definitely will have an impact, and we have to see how much that really is what will continue. And for the time being, we expect still some work from the life science solutions. Those systems which are in the market are still running. It's still a business where we do service spare parts with those customers, but the new equipment will have an impact.
Thank you. Can you give us a little bit more understanding of what your plans are regarding continuous restructuring of the curing unit? Because there seems to be, or there seems to have been issues for a while now. How do you want to deal with that, and other immediate plans or just continuous plans that you have?
No, I mean, there's two issues. One is, of course, the orders where we are fighting with the systems we have in our portfolio, which are high in price compared to an upcoming competition, which is stronger and stronger, coming also from Southeast Asia, from China. So there are new products coming. The development products are running, which cover those topics where we have a significant cost reduction in those systems. That also in the future we will be very competitive here. And the other ones, of course, is with the reluctance in the market here. We are more showing more activity in the field, having more activity in direct communication with the customers to make sure we comply to what they expect, what they need. It's just more sales activity.
Do you plan to diversify internationally further in the curing business?
I mean, this is not the first topic because I mean we are more diversifying into other applications than just print. I mean, there is the let's say classical offset print where we have the biggest difficulty, but there is other markets like the digital 3D printing, label printing. Here we do see still activity where we have to adapt our portfolio a little bit, and that is basically in the makings. But other regions, I don't see that we have some issues here. Installed base life cycle solution, that might be a topic where we will be more aggressive in markets outside of Europe, because there's an installed base where we have today we have not a lot of access to those customers, but that is something which is also in the makings. But expanding in direction new, let's say, organizations in those countries, I don't see.
Can you give us an idea of how big of a cost reduction in the curing business you're looking at in percentage of cost of goods sold, if that's possible?
I think that's difficult. So we have a restructuring program also in the field of our purchasing, but that relates also to our engineering and the design and how we will be able to have a platform, a modular concept. So this is really difficult to put in a concrete percentage. We are working onwards on the reduction of our materials, and I think we see also a progress in our materials or cost of goods sold ratio, and we try to reach and continue this positive trend on this point.
Do you have any costs associated with MAN Roland now that are burning your P&L?
No, the orders we had on hand are still executed. This is done. As I said, the spare part and service business will continue because it's not directly from MAN Roland, but from their customers. I mean, there's not a significant burden right now. I think we expect from the existing orders.
Okay, great. Thank you. Looking at the overall business development in curing, you mentioned two bigger impacts. One of them was MAN Roland, and there was another one. If we leave those two aside, top line wise, were the other clients developing as in the past years, or did you see a negative impact on that as well?
No, I mean, there's still this what we call the base load of orders, which is coming in. It's a little bit up and down, of course, but the main difficulties are right now is that as I said, our product line. These are basically two different product lines which are from a development a little bit behind schedule that has been pushed to improve. So for end of the year, our fiscal year, third quarter calendar year, that should be available, where we will have a much better position in comparison to our competitors. I mean, that is something which is difficult to sell right now, although I have to say a little bit, but on the positive side, we have a very good customer-client relationship. Some customers stick to Hoenle, but I mean, we cannot overstretch. I mean, we also have gotten information. Okay, Koenig & Bauer, which we lost an application where we had a system that is to price to cost structure, and here's where we have to go through a transition that our cost structure, our designs are a little bit outdated and get updated.
Thank you. Looking at curing again, what were the latest development, let's say roughly over the last 3 years, that gave you a USP in this area? Or were there any products with a specific USP, or is it? I
mean, that is the latest development. I mean, that is a little bit what I see as the difficulties. The real latest, the last new product is quite a while ago, and that is also basically the reason why we are changing also a lot from management structure, that we have to focus more on product development than we did in the past. There is still our top product, which is what we call the focus line, which has an optic included and can work in a distance of 6 to 8 centimeters, 60, 80 millimeters. It's really for an LED system, a significant exposure gap, so to speak, which is basically the best in the market, but also the price is very, very high, and that is a burden. Here we have a development, as I said, where the cost will come down significantly, and then I would probably say that is in the 25-30% cost reduction, which is what I can see here, which will change the picture again.
Thank you. Just a question of structure and responsibility. Looking at the curing unit, who is in charge of the curing unit, respectively the restructuring of the curing unit? Is that a matrix, or is that in your hand? Or
no, I mean, that is something where we, both of us, Robert and I, take responsibility and lead that process here, because that is really the business unit here in Gilching, in the AG, where we have significant restructuring in front of us. That is led by us, both of us.
Okay, great. Give me 1 second. I'm just sorting some questions here, and while I'm doing this, let us move on to the next business unit, which is disinfection. The question is regarding Q2 margins, which were softening in disinfection in Q2 despite significant top-line growth. Was the margin pressure due to investments in the international sales capacity, i.e. higher costs on that end? And if so, when should we expect this investment to start contributing meaningfully to growth and expansion?
Yeah. So basically, the contribution will come. So we have new people in sales, as written in the US, also in China, and in south of Europe. So this was definitely one effect. We had some stronger equipment systems business, so that's also a product mix effect between the lamps and the components, which have very, very high margins, and then the systems business with a little bit lower margins. So these are effects for the margin on this point.
Okay, great. Thank you. Can you tell us what the current sales contribution for markets abroad are in Asia and in the US, and what the expected target level in a 2 to 3 year time frame would be?
So in the disinfection business, we are developing still US and Asia. So in the past we didn't have really a sales organization. We put here new people. So in both of the fields we are talking. In China, less than €1 million, and in the US, shy of €1 million, I would say. So the business abroad currently is on a low level, but with the focus to increase that. Yeah, target levels. I don't know, Franz.
Yeah, hard to say.
Let's continue with the next question, also on the disinfection business. If you look at the material cost ratio in, we're moving on to the adhesives business. The optimized material cost ratio in the adhesive solutions based on the specific product mix, i.e. the increase, the optimize, the better material cost ratio. Was that based on the specific product mix, or were there other benefiting factors?
I mean, in principle, the adhesive, as you all know, is a consumable, and the material itself, the raw material, is not the main cost contribution, or with other words, the gross profit margin or the gross profit is usually very high margin in the 70 to 80%. The cost really is in the formulation, in the qualification, and if that job is done, then it depends purely on whether the customer orders a kilogram or 100 kilogram or a ton, which makes a big difference. And as we have said before, the goal here is, of course, get back to higher volume order sizes or higher volume orders. And that is basically by increasing prices for the minimum volume, so the minimum price or minimum price level we have increased and introduced, and through our activities going into technology days with customers, getting more introduction and more interaction with bigger customers to come to higher volumes again. That is working positively, but we do not see that is not the biggest contribution here. I think a slightly increased order volume, product mix that has contributed positively, and of course the minimum price level, which probably is not really in the second quarter figures so much. Will come more in the third quarter.
Great. If we look at Q2 and the demand development in the adhesive solutions business, we saw a lot of demand coming from multiple projects. What kind of application cases did these relate to? And in your opinion, is the elevation of demand expected to have more of a recurring component or be a flash in the pan?
I think right now we are still seeing a broad mix of application, and we have defined focus field. Of course, a big opportunity is always the electronic, as you see in the consumer electronic or the electronics, also the optical part. There's a lot of shrinkage, a lot of integration, technical integration. That means more and more application for adhesives. And here is the one strong focus on that we are more and more talking and try to get more introduced and more interaction with the bigger customers who are defining the system and define the technology they use. And usually that is done by having technology days with our technicians, their technicians, so that we have an exchange here and can introduce what we can offer, and that leads slowly, step by step, to a higher volume. It's a time-consuming process because no material will get into volume manufacturing just by one presentation, but it has a positive effect starting slowly.
Great. We have a lot more questions circling around the electronic AI growth opportunities. And let me start up with this one. Are there a rise in new opportunities in electronics owing to the strong activity around AI hardware? If so, what does the time frame look like?
Yeah, as I said, I mean, we do have positive discussions. I'm very happy that this happens again. It's too early to say. I don't want to overstretch here and to heat up expectations too early. It will take time. As I said, the design-in process, the qualification process is a time-consuming process that will take 2-3 quarters. It will start with lower volumes first, but really to see a volume effect, which definitely would be very interesting for us. That will take some time. But there are discussions ongoing with, I would say, with the right customers on the right format.
Can you give us a quick update on the integrated solution strategy in the adhesives business, adhesives systems business, following the restructuring last year? And do you have any customer traction in that space?
I mean, that goes on both sides. I mean, we do have curing equipment which is used by customer using other material. As I said, the design-in process of material and volume production takes time and is a time-consuming process. So if there's material already qualified, it's qualified for that product series as long as it runs. And if they use different equipment, then we supply equipment and vice versa. We do have applications where we sell material where the customer already has equipment, but it's very helpful and it's very interesting. You always need a door to enter a customer relationship, an inroad, and that is definitely possible with our equipment companies, that we can also bring in adhesive salespeople, adhesive technicians. It's progressing. It's an interesting interaction, but it's still room to optimize. It still can grow.
Great. I have one question that we basically already answered. I still want to pose it though, just in case you want to add anything, which is your view of the overall opportunities in the semiconductor industry regarding adhesives, currently discussions with potential large clients, and particularly in the rapidly growing AI photonics space.
I mean, as I said, I mean, first of all, I'm giving my history in the industry, the semiconductor, and we talk here basically about the integration, the packaging, and which is more and more going into optical applications, optical communication, inter-chip communication. There are more and more applications, and we have to be part of that discussion. But it's an attractive market, it's a growing market. We do have the right context, but of course it takes time to really see results coming out of that because as I said, design in a mass production series there's a lot of qualification steps to be done before. But it remains a very attractive market. As I said, it's the chip integration, the packaging, the package become bigger, more and more integrated, especially with the AI application, and more co-packaged optics application where we need to introduce adhesives, where more and more connection glue applications and adhesive applications are requested. So there is a very interesting area also for us.
Great. Can you quickly talk about ultra pure water a little bit, the opportunities that you see, size and timing, also because there seems to be a lot of demand developing in that space. Can you give us some color, please?
The ultra pure water application, I mean, the first development was done with an IC manufacturer here in Germany, in Dresden area, and basically that application is now introduced to bigger customer in Asia, especially in Taiwan right now. And that is also a very attractive market. As always in those things, it takes a little bit of time, but we are seeing positive response from those customers because the systems which have proven in production environment here is a very good reference for us.
Great, thank you. I've got one more question, which is dealing with a trade deal between the EU and Australia, which in particular is expected to provide opportunities in equipment exports on account of lower tariffs. To the person who's asking the questions, understanding you're already engaged in Australia through distribution partnerships, while it may still take a few months for this deal to really come into effect, are you looking at intensifying your business volume and presence in Australia in 2027 going forward?
Yeah, Australia, also South America. I mean, South America, as I said before, briefly, especially with the retrofit, with conversion, it's a very attractive idea to convert established and also installed UV lamp systems with LED systems. There is basically what we have shown cases where you can have a return of investment of 1.7 years for switching from a classical UV lamp to an LED system, giving the huge installed base of several thousand systems in the field. There is a focus from our lifecycle solution to come up with packages for those, and that's of course also with the new tariff situation and contracts we can do in South America, Australia. It's attractive, but South America has a significant industry which would fit.
Thank you so much. It looks like we are out of questions, so thank you very much for the very broad array of questions that we had today. I think this is one of the livelier earnings calls we've had. Thanks everybody for attending and for your interest in Hoenle AG. As I mentioned, we did record this call and we will post it on Research Hub later. Franz, Robert, thanks so much for the insight that you shared and the answers you provided to the questions. If there should be any open questions or additional questions coming up, please feel free to contact Mr. Weinert of Hoenle AG, or also, of course, our analyst who stands ready to take your questions. Wish everybody a great afternoon. And if you have a second, we send out a quick questionnaire for your feedback, which would be greatly appreciated. So if you have a second, please fill it out. Thanks so much, everybody.
Thank you very much also from our side for participating in this call. Enjoyed it very much. Thanks.
Thank you.
Super. Thank you. And a good afternoon. Bye.
Bye.